have we seen Americans participating in this yet? Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and excited to welcome back a special guest who is our normal Tuesday superstar, although he was on a well-earned vacation over the past couple of weeks, and perhaps he'll be able to give us the European perspective of everything that's been going on in the gold and silver markets. And of course, I am joined by Andy Schectman of Miles Franklin, back on track for our regular Tuesday call where we take a look at the things going on in gold and silver and also touch on what's happening on the physical level. And it'd be great to get an update on that since a lot has happened since you've been gone, Andrew, but it's nice to see you back here. And I hear you had a good vacation, and I hear you were not glued to the gold price ticker the entire time also. Is that correct?
No, it was really good to get away, brother. It's also great to see you and be back. And yeah, it's really nuts how much can slip by in a period of a few weeks if you're not paying attention every single day. And a little vacation, a little rest and relaxation is always good for the soul. But always good to be back with you, my friend. And thanks for having me.
Well, it's a pleasure to have you here as always. And obviously, I know we have a lot of people. You have quite a fan base these days, and everyone has been wondering what does Andy think of really a pretty wild rally. I've been talking with our friend Dave Pranzler, a couple of others, and I don't know, maybe there's some periods in 2011 that felt a little bit like this, but I've been expecting the sell-off at some point, maybe around 22 or 2300 has not come yet, and not on the silver side either. But I'll pull up the charts here where as of Monday afternoon, we're almost back up to that $28 level, which we crossed for a couple of hours last night. And gold is right around 2360. But why don't we start there? I'm going to have some questions about how Americans are responding, anything that's been going on the premium levels, but any general reactions to what we've seen over these past almost 2 months now since this rally began. And what do you think at this point?
You made a comment, brother, and you said something like, I'm just waiting for the other shoe to drop, basically. And that's what we've all been, I guess, conditioned into believing. And rightfully so. It has been one of these deals where the commercial banks or whoever pulling the strings will suck in the speculators, let the price run, and then smack it. And from a standpoint of technical of it being oversold, yeah, certainly it's above its moving averages, and we would expect it to be hit. But I'll tell you, and I mean this honest to God, that it feels different this time. Something feels very different. And maybe it's that the Chinese and some of the BRICS nations really are controlling the price now. I mean, we've talked about arbitrage, right? Where silver is $3 an ounce higher in Shanghai and gold 70, $80 higher in Shanghai than it is on London or on COMEX, where the institutional traders who are privileged enough, and I say that tongue in cheek, to have access to all three markets can buy in the West and deliver in the East. And there was a report that just came out by some analysts at BMO at Bank of Montreal who said the numbers that China is giving us are way understating reality, that they're buying way more and producing way more than they will ever let us know. And look, this morning, I don't know, you mentioned you stayed up last night watching gold and silver. Then you obviously saw it open way down and then bang, shot straight up. What's interesting is that this morning in Shanghai, the silver futures were up 7%, limit up, and the breakers came on and shut down the market for a little bit. And gold up 3%. Last week alone, silver was up 10%, with gold up 4% in 1 week. And these are things that we never have seen. I've never seen in 34 years a market that has this much resilience. And I mean, if you ask me, the commercial banks aren't, but if you were to ask me, I think being naked short in this environment is more dumb than a mud wall in a rainstorm. And I think that it just feels different. I mean, look at gold. It's up 7.5 times this century. It's up a compounding yield of over 9% over the last, 24 years. And And so it's moving, but not at the speed we'd like it to be moving until now. All of a sudden, things are moving much more rapidly. Now, the question is it going to be an environment where the commercial banks sell into short into a rising market, which is the dumbest thing you can do unless your pockets are really deep, as theirs are? Or are they going to get away from this? Because I've always believed that the pricing mechanism right now is being utilized against us by the traders across the globe, using the stupidity of the Western traders who suppress gold and silver with tremendous amount of paper, tremendous amount, rather than letting the supply demand fundamentals push the price higher. They have a deal. Well, I'll tell you what, we'll just pretend and I'll create a whole bunch of leverage paper and you just put money in your margin account. So you don't have to pay for it and we don't have to deliver it, unless, of course, you get a margin call. But the bottom line is this leverage that is courtesy of the West is being exploited and used against us. Now, I believe that ultimately the price will move eastward. And you said to me, why isn't silver over 29 bucks? That sucks. Well, it is in Shanghai. And I think
Well,
that's really
just a quick
important.
disclaimer. I was joking about
I
that.
know you were
Where
joking.
it's to
I know you were
28, and
just
how
being
come it's not
goofy.
29 by the morning? So
Right. Well, you also said when you texted me in
silver
Europe
rally
and said, will
problem.
silver be 200 by tomorrow? And I said, yes. So look, the bottom line is this: it is moving around the globe, most of the world, the way it's supposed to. It's just blurred by strong dollar, which again, look, everything. And I listened to a 2-minute clip that Vince put out yesterday. It was beautiful. It made so much sense. I know you know what I'm talking about, where he basically said the traders don't care about relationships between gold and silver. They don't care between interest rates. They don't care about any of these things. They just want the metal. And I think that's really the thing, is that gold and silver are doing what they're supposed to do in the rest of the world. It's that the dollar is inordinately strong. So here we have a strong dollar, we have rising interest rates, real interest rates, we have outflows out of the ETFs, we have all of this stuff where the public has been selling since November into this market, and yet the price keeps going higher. That's why it feels different to me this time. And maybe some powers more powerful than the Western commercial banks are standing up to them saying, go ahead, suppress it. We'll stand for delivery. And when you see the way that it reacted yesterday morning or today, this morning in China, down immediately and then bang, shot right back up. It was a move of like 30 bucks in gold in just a matter of a minute and almost $1 in silver from down 50 to up 50. Something's different, Chris. And I don't know if that something different lasts or this is just the very beginning, or do we get bitch slapped again the way we always have? I don't know. But I do know that all manipulations do end. And one of these days, the groups that have been holding down the price will let it run out of self-preservation. And for those who don't believe that, just go back and listen to what Bart Chilton told you about Bear Stearns. And it can happen, and it will happen if you're on the wrong side of a trade when the whole globe is moving in that direction. It's not smart to be short, especially naked short.
Well, I hear you. And in your answer there, you mentioned the ETF. So we'll take a quick look at those because here is the transparent gold holdings. This does also include the COMEX, but you can see, aside from the banking issues last year where you had some inflows there, pretty much seeing metals steadily come out as represented by the blue line, with that yellow line being the price. And if we take a look back a little further, you can see they used to be quite highly correlated, although that has changed a bit in the past year or so. A little bit of a different picture in silver, where we had seen metal coming out, although there was a big, about 30 million ounces put into one of the European ETFs. So we'll keep an eye on that and see how that changes. Again, there's obviously we've talked about the deficits, and seems like there's more talk on that. And as I was looking at earlier today, there is the report from TD Securities, a silver squeeze you can buy into. So they're even talking about how the metal has been coming out. And along those lines, one of the things I've been wanting to ask you, and I think is on a lot of people's minds, is have we seen Americans participating in this yet?
No.
I know you were on vacation. I'm assuming you probably kept an eye on sales, and we've been in this period for a while where maybe not zero in terms of Americans investing, but not the highs of the past couple of years since Silver Squeeze. And I'm wondering how much that's changed in the past couple of weeks.
You know, it's almost sounds like a canned answer, but it's not. I swear to God, it's not. I mean, we've seen very big orders where people who understand what's happening are taking initiative, and we've seen large orders. But in March and April, when Silicon and Signature failed, we added 14,000 clients in 45 days. That's 4 or 5 years worth of clients. We're not seeing that type of participation. We're seeing participation from the people who get it, the people who've been listening to you through all of this time, and understand. You see, I think too many people have become fixated on making huge sums of money very quickly. As fun as that sounds, 34 years of industry in finance has taught me that that's an anomaly. Bitcoin and Nvidia and these things that have made people very wealthy very quickly, that's the fixation. And they've ignored completely. There's no fanfare. There's no talk on the media about it at all, virtually. I mean, there's a one story, but that's a bank putting it out. That's not CNBC. And so, no, the public participation still is less than about 0.5%. That's the estimate from Joe and Jane Sixpack to the Harvard Endowment Fund. So it is massively underallocated, and it is massively underspoken of. And everyone's talking about Bitcoin and AI stocks, and quietly the tortoise marches on. And it's, look, it's outperformed most asset classes for the past 25 years unnoticed. And now, especially with it at $2,300 an ounce, you would think it would be everywhere, but it's not. It's not flashy. It's not sexy, because hell, Bitcoin is $70,000 a coin. So that's way more fun to talk about. I get it. I understand it. But in the scheme of things, what is the one asset that every single central bank on the planet is in search of? It's gold. And so I think that who knows how high it goes? Who knows how high silver really, truly goes? But I think it will go higher than anyone thinks possible. And what it really offers to me is an exodus out of a system that is crumbling, that is breaking, where in every 3 months we're adding $1 trillion in debt to the system, where in 20 days recently, I just wrote down the number here, in 20 days the debt increased from just give you the number here real quick. In 20 days, the debt rose by $168 billion in 20 days. And I mean, we're so far past being insolvent and broke that this is not about becoming wealthy. It is the realization and the understanding that the people accumulating it, the most well-informed traders in the world, they're not buying it to get wealthy. They already have more money than they would ever need. They are the central banks. They're buying it because it is wealth, and it is being, as Vince said, remonetized in every currency around the globe. This hasn't happened in dollars yet. It will. And I think that, buying silver right now, sub $30 is a generational gift. And that doesn't come out of my mouth easy, because I know people are saying, yeah, bullshit. It's been insufferable for a long time, and it has. But that, if you take a step back and think logically, I mean, there's got to be a significance to that. Why do they not want it to go higher? Why are they trying so hard to hold it down? You mentioned the ETFs. Ted Butler just said that in one day, the other day, in one day, someone or some entity shorted 12,599,986 shares in one day of the SLV ETF. Well, silver's up today. What are we up today? Let's see how that person is sleeping. Oh, it's up 37 cents an ounce. That person's getting his ass kicked. Is it different this time? I don't know. But what is not different this time is the American public participation, because this is why, Chris, so few people succeed in investing, because they follow the herd. That's why there's wave theory, Elliott wave, Kondratiev wave, emotions. It's much harder to do what you and I have done, stand out in front of the public when it wasn't obvious and saying this is coming than it is for the people to stand down on a limb and spend their own money believing that. Most people don't believe their own intuition. They don't listen to it. They follow the herd and an advisory who typically is wrong. And look, you could say we've been wrong by missing out on some of the run in the stock market, but everything has a cycle. And I think in 1 or 2 or 3 days, being right will end up saving untold amounts of money. You can be wrong in the path of a circle until you get to that inflection point. And it just feels like we're getting to that point. I guess I'll just simply say this. In all of my career, honest to God, this feels different. Now, I'm sure by the time you post this, it's going to get clobbered and I'll be wrong. But I will tell you, if I were being completely honest, having a scotch with you, I'd say, man, it feels different. Something feels different. Market has got strength that I have never seen and resiliency that I have never, ever, ever seen. So I guess we'll see.
Well, fortunately, my Scotch days are long behind me at this point, although
I can change that. I've been known as a bad influence, brother.
well, I don't know about that one,
Yeah,
but
I showed you, but I'll show everyone else. This is what happens when you go to Amsterdam
oh
and
boy,
party a
don't
little
do
too
it.
much. You get your first tattoo. So there it is. That's the periodic table of elements for all of you kids who flunked chemistry, but palladium and silver, platinum, and gold. I got talked into doing it, and I wavered even into as much as sitting in the chair to do it. I'm like, fine. So I'm glad I did it, actually. I kind of like it. So anyways,
Well,
I digress.
you can get an American Eagle on the other arm next year when you.
Yeah, I've already said I need. Actually, you know what I wanted to put right underneath it was the phrase that I've said more than anything else over the past year: little by little by little, then all at once. You know, so that's how I feel. Describes a lot of what's happening, including the silver and gold market, including all of the things that are happening in the economy or with the culture or society. Things have changed little by little by little, then bang, all at once. I mean, talk about censorship. You know, prior to 2020, we never would have dreamed about having to not say the name of a virus or the president's son's name or any of these things that back then would have got you taken off of YouTube. But little by little by little, then bang, all at once, everything changed. But that's happening across the board in everything: culture, economics, geopolitical events, political, everything. So that's going to be tattoo number 2 underneath the periodic table of elements.
Well, obviously, that's a reason to hit the subscribe button if you're watching at home right now, because you're not going to want to miss that one.
Nope, nope, definitely.
Andy, the one other thing I wanted to ask you about is the premium levels. Have those changed at all in the midst of the rally, or how are things looking there?
Silver Eagles are coming up, and that's the first time I've seen it, and they are a precursor. They are coming up again, and we have a special right now that's maybe better than anyone in the country. Maybe less than 1 or 2 companies in the country are priced lower. I don't think, I don't know, but we have 2024 Silver Eagles. You can only buy 1,500 because the mint hasn't really produced much of anything since March again. But 1,500 at 550 over spot. And that's higher than, maybe 75 cents higher than they were just a week or 2 ago. Premiums are rising on the Silver Eagles. Nothing else yet, but that to me is indicative of, perhaps a leading indicator of higher premiums coming ahead. What's interesting to me is that most of the people I talk to these days want Silver Eagles. They do, and right, wrong, or indifferent. So maybe that's part of it, along with the states that are approving, legal tender coins as currency. There's something I think to be said about that. We also, by the way, have junk silver priced at 275 over spot in stock as well. I know you usually ask me what the specials are, so I'll just preempt that. But I would just simply say this, that
Front running the special.
yeah, well, look, in all of my career, I don't know that I've seen maybe once or twice premiums as atrocious as they are right now. I mean, they're low. And that is another thing to keep in mind. How is it that if the public's not buying, in fact, they're selling? I mean, look, our business is very strong, but not what it should be. But with the public selling, with outflows out of the ETFs, with rising real interest rates, with the rising dollar, all of these things, and the public not participating, and yet the metal keeps going higher. This is why I say it feels different. And The one thing I've learned in this industry about availability, about supply, is that in the blink of an eye, it can change, because what I consider to be overly stocked and flush with supply would last 10 minutes if the public woke up. In an environment like we saw in March, where a bank goes under and God forbid gets bailed in, and the rush to acquire physical in their possession quickly in 10 minutes would blow out the industry. And, $1 billion in this industry is now on back order. It sounds like a lot of money, but it is. But, how much business would need to be done by a public if the 0.5% allocation increases just to 5%, a tenfold increase in the public's demand across the board for gold and silver like that wipes it all out. And so, yes, it's flush, and yes, the premiums are low, but the public's stupid. The public is focused on greed, on AI, on Bitcoin, and greed kills. Pigs get fed, hogs get slaughtered. If you made all this money in crypto, if you've made all of this money in AI, then take some of the money off the damn table, be smart, and move it into an asset that is still massively undervalued by all measurements, geologically, historically, inflation adjusted, and hedge your bet. There's too many people out there, whether it be in the crypto space or in the traditional security space, who believes that assets have to be mutually exclusive, that you can't understand diversification amongst asset classes, like real diversification, not just all of stocks, bonds, and real estate. And okay, some crypto. How about some non-dollar denominated assets like precious metals? And in the case of silver, it's one of the few assets on the planet that is grossly undervalued and underappreciated and underallocated. Yet a country like India doesn't see it that way, as they've imported over 400 million ounces in the last 2 years. So this will all change. And, they may carve your face on Mount Rushmore someday. Who knows? For being the Paul Revere, if you will, of silver, long before the silver price was coming. But I admire that actually a lot. And I think that in the end, mathematics, economics, and that little sprinkling of logic that you're so good at and sprinkling all over the place will resonate and will happen. Unfortunately, will probably come on the heels of some sort of an event, whether it be politically or geopolitically, God forbid, some form of terrorist attempt or a bank failure, whatever it is, or insurance company failure, whatever it is. Silver and gold are not just for the apocalypse. They are wealth that has outlived everything the world's thrown at it. And I think people need to realize that sometimes return on your money is fantastic, but sometimes return of your money is a whole lot better. And I don't know. I just think we'll have our time. And I will say to you again, it feels different this time. I guess we'll see next week or the week after if I was right or wrong, but it feels different to me.
Well, if I'm up on Mount Rushmore next month, we'll know something has happened. We may have $50,000 silver before that one goes down, but I
Yeah, who knows,
appreciate I
man? I
appreciate
don't
the
know. I
sentiment.
think it would look great. It would look great, man.
Well, that's kind of you. Well, I'm going to show you
Oh,
one.
Dad, who is that? Who's that new guy on there? Well, that's Chris from Arcadia Economics. He told us all about silver, honey. You never know. Stranger things have happened.
Well, I guess we'll keep an open mind. And I'm going to give you a little teaser. I'll just show you one of these, and then maybe we'll dig in more next week. But while you were gone, I don't know if you're aware that the World Bank put out a gold investing handbook for asset managers. Actually had quite a few interesting notes in there, although just one that touches on what you just mentioned. This is again from the World Bank. Typical central bank portfolios predominantly consist of investment grade fixed income. Unfortunately, even the highest quality debt instruments, I don't know if they're talking about the US Treasury there, are not entirely free from credit risk. And in the last 40 years, the world has seen numerous instances of debt defaults or restructuring. Also, when held in specific form and place, gold has no credit default or political conditions or political risk conditions that no other traditional safe haven asset, perhaps aside from silver, can offer. So who knows, Andy? Maybe the World Bank is tuning in to the weekly physical silver report with Andy Schectman here on the Arcadia channel, and seems like even if not, they're coming to a similar conclusion. So
And you
I
know
got
what's interesting, Chris,
I
real
got a
quick,
bunch of
because,
other highlights here to tease you with,
well, hold on, real
which is
quick.
set for next week.
Hold on, because you said one thing there, that the World Bank is telling the people that even treasuries have risk, right? So there was just a report. Let me find it here. And so the International Swaps and Derivatives Association just wrote to the Board of Governors of the Federal Reserve and the FDIC and the Office of the Comptroller of the Currency
They don't want
to
to have to
urge
count
the
treasuries.
agencies to implement targeted reforms to the supplementary leverage ratio, the SLR, which basically is how much leverage can you have above your assets. And basically what they are asking for is the exclusion of on-balance sheet US treasuries. So your treasuries are considered riskless and you can have as much as you want and it doesn't factor into the leverage ratio, because that's a good idea, right? So, I think it's interesting to note that, that says a lot about the state of the treasury market, where they're basically trying to get the banks to load up on treasuries again, like they didn't learn the first time, and say, don't worry, everything will be okay. But, I digress anyway. So I just thought that'd be interesting
I
to
was thinking
mention.
about that too, because I was wondering, does that mean they're not going to raise interest rates again? Because we had the banks load up on treasuries in the last couple of years, then they raised interest rates and you had a couple of banks fail. But I know I said last one, although another teaser that I don't know if you saw while you were gone, you aware that the Philadelphia Fed has published a paper on whether the gold standard would stabilize prices?
I am not, but I can't wait to read that. I would love it if you'd send that to me, please.
And the short conclusion is, well, the gold standard exposes the home country to short-term fluctuations in money prices and output. It ensures long-term stability as the quantity of money and prices only temporarily deviate from their steady state levels. So Fed studying a gold standard, and according to them, it works.
Well, and with gold being the tier one asset, do you think there's any coincidence the central banks have bought as much as they have over the last 3 years? And do you think there's any coincidence that China's now bought for 17 straight months, and on and on and on and on? And what did Kristalina Georgieva say, the head of the IMF, that a central bank digital currency not pegged to something is just a fiat currency? And that's where the marriage of blockchain technology and gold, I believe, converge at some point somehow. And it's not a shocker to me. And I think the way they will do it is they'll take a very small fraction of this ounce of gold and they'll say, 10% or not this ounce of gold, this is a new dollar. So they'll say 10% of this new dollar is pegged by gold. And that would still give them monetary latitude to increase the money supply and to do their thing, but not too much, because all politicians have chosen the path of inflation over austerity since the beginning of time, and it will not change. And by the way, if you look at a coin like this gold eagle here, you see the ridges on it, and the ridges on the coins is because of that. Going back to Roman times, they would trim the edges of the coins to pay their soldiers and cut a little bit off. And you do that to all the coins. Well, you got enough to make a whole bunch more coins. This is debasement or inflation, and it goes all the way back. That's why there are ridges on coins. Well, the politicians do it now by getting rid of M3, the broadest measure of the money supply, and blurring all of the metrics by which we gauge inflation. And they do the same thing. It's just a different flavor. So going back to the gold standard would be the only way to keep things in check. And I do believe, and I've said this for 3.5 years now, that is ultimately where we are going. And they will peg gold to a new system to give it credibility. Because once you piss in the punch bowl, no one's going to drink that ever again. Oh, here's a fresh bowl for you. We didn't piss in it, I promise you. Right. So instead, we want something different. And that is gold and blockchain technology. That Zoltan Pozar, commodities and transparency, I'm telling you, that is where we're going, I believe. And remember, there's a 90% correlation throughout all of history between gold and silver. So when I say gold, ignoring silver, I'm not purposely doing that. Silver will come along for the ride. May not happen with perfect symmetry, but it will. And I personally will tell you that in the end, I think the place to be is gold, but I think the investment, and I say this, normally don't say the word investment when I buy metals, but the investment of a decade or a generation anyway, to me is silver right now. So I guess we'll see. And hopefully I can get front row seating to the carving of your name and your face on that Mount Rushmore of of silver influencers. But I think we'll have our day, Chris. Honest to God, I believe we will, and I think you'll be proven right after all of this pain of and suffering through counterintuitive action. We'll be right. And the unfortunate part about being right, it'll come at the expense of the people we love and care about, as they will be whipsawed by something they never saw coming. Because, as I've said before, hard to get out of the way of something you don't see coming. Yet to you and I, we've already ducked and hiding for cover. Everyone else is standing square in the middle of something coming right down the pike. Guess we'll have to see, bro. But we'll see what happens by this time next week. And of course, it's always great to be here with you, and look forward to seeing you again real soon.
Well, ladies and gentlemen, that is why the World Bank and the Federal Reserve may or may not be watching Andy Schectman's weekly physical silver report on the Arcadia Economics channel. And Andy, it's great to have you back. Thanks as always for making some time and had some fun here today. And we'll catch up with you again next week.
God bless you, brother. I'll talk to you soon.
Well, thank you, Andy, for today's call. Certainly nice to see him back on the show and glad he had a nice breakaway. And hopefully you found that one helpful at home, at least to get an idea of what has been happening on the retail bullion level, as well as some of the other developments. And real quick, before we wrap up, I would just like to thank Silver Viper Minerals, who brought us today's show, and actually caught up with Steve Cope yesterday, who runs Silver Viper, and recorded an interview where we talk about the dynamics in the silver market. And he also gives us an update on the company, which includes that they did announce a $4 million private placement back on Thursday. And that will allow them to finally get out and continue drilling their project, which could result in drill results as early as the end of May in a best case scenario, and hopefully not too much after that, even if things take a little longer than expected. But I'll put the link to this press release in the description field below so you can find out a little bit more about the details, but did want to pass that along. And with that said, going to wrap up for today, but hope you're having a great day out there and enjoy the show, and I will see you again tomorrow.